So basically, there's a lot of positive forces that are in place once we get the corona virus under control, which we're hoping will be a sort of a short-term effect. There's a lot of things that hit us in 2019 that will basically provide an upside in 2020. One of those things is the Boeing shutdown, which is actually a big deal for exports. The trade agreements that we struck in early January, USMCA and the Phase 1 with China, are also great for export markets in terms of opening up. And so we're pretty optimistic, and we think this continuation of sort of the Trump economy that we've seen is very, very different from what we saw in the prior part of the expansion after the Great Recession.
Sure. So let me ask you about the Federal Reserve, because last year 3 rate cuts did a lot to shore up the economy. Do you expect they're going to cut rates this year? Should they? And would that support that 3.1% growth target?
In general, the CEA sort of respect the independence of the Fed and do not really comment on the desirability of the policies. But one difference that we can talk about is sort of what the effects are. And if you look at the early part of the expansion, it was a very easy monetary policy of 0 rates throughout until 16 and 17 and 18. And we actually, usually what happens in an expansion is that you have very rapid growth following a recession, particularly a financial recession than the one we saw, as the one we saw after the Great Recession, after which growth kind of settles down. It's kind of the opposite that has happened in this expansion. It was very, very slow growth initially, even though we had very expansionary monetary policy. And even though we had sort of 8 rate hikes, and now they've come down a couple of times or 3 times, we still had a much accelerated growth in the Trump economy. So I think, if you look at what happened in 2016, people predicted what a continuation of an Obama economy would look like. And so basically we had the answers to what people thought the continuation of an Obama economy looked like. And now they want to claim this is a continuation of an Obama economy, even though we just shattered those numbers. For example, we had 3.5 times more jobs created with 7 million jobs as opposed to 2 million jobs that were predicted in 2016.
Let me just ask you, because we have time for one more. You had an annual report yesterday that called out housing, which has become a hot-button issue in this country. You said major cities, including San Francisco, Los Angeles, Washington, Denver, Baltimore, are not building enough to meet demand in those areas. It's driving home prices way above construction costs and hurting income inequality across the country. What would you like to see done about that?
Well, it's a state and local issue, but it's actually concentrated in a very few set of cities that are very intrusive in terms of their government policies, restricting supply in those cities and therefore raising prices. That's particularly worrisome now when we have a sort of a housing boom with low interest rates coming in, and we see a surge in demand because, we have this blue-collar boom that's basically raised demand for housing because people are working more, they're earning more, and it could be a dangerous situation. But it's really in a few locales or cities that have very, very restricted government policies on how much housing you can build.
Got it. So highlighting that it's policy contributions there that are creating this. Mr. Philipson, thank you so much. We appreciate your time.
Thank you.